Rachelle, it certainly feels like there's a bit of a pause happening among investors as we look ahead to this afternoon when Fed Chair Jay Powell will be giving his comments. The last one, by the way, before that all-important Fed meeting in the middle of December.
Indeed. I mean, markets obviously digesting a lot at the moment. You had, as you mentioned, the private companies adding 127,000 positions for the month. That's well below estimates, according to ADP, which let people think, look, the Fed's medicine is working. They're maybe going to ease up on rates. But then you had the October JOLTS numbers coming in higher than expected. And then you also had the Commerce Department's GDP revision showing that economic growth was stronger than expected as well. So when you had that mixed picture, we did see, with especially the Dow start tanking earlier this morning. At first, they were sort of rallying on that initial news. But once they sort of saw that the picture might be a bit more complex, we saw them start to sort of dive as they're sort of awaiting these words. Basically, they need the word from Powell. They need some kind of certainty at this point, Akiko.
Yeah, no question about it. And when you think about where things have moved, you know, sort of taking a step back, given that this is the last meeting of the year. We started out the year with Jay Powell saying he expected inflation to kind of ease as we go into the next year. Instead, what we have seen over the last several months is really the most aggressive tightening from the Fed that we have seen in decades. Of course, there are 4 consecutive 75 basis point hikes. The expectation coming into this December, or this in 2 weeks from now, will be 50 basis points. And, you know, interesting numbers coming out today in terms of private payrolls here, because they did come in lower than expected. 127,000 positions added for the month. That's well below the 190,000 that was expected. And certainly some people would point to that and say, look, you know, maybe this is a sign that things are cooling. Of course, what we have heard from Fed officials over and over is that it's not just 1 month. It's not just one data set that's really going to lead them to do this so-called pivot. Certainly not a lot of economists expecting that anymore. Maybe a slowing more than a pivot.
And I mean, you know, the Fed is in a tough position here because they've been accused of being too slow to address inflation and now perhaps going too far too fast as they wait for the medicine to sort of sink in and catch up with the real economy. We saw Elon Musk even weighing in on this, taking time out from his standoff with Apple to say the Fed needs to cut interest rates immediately. They are massively amplifying the probability of a severe recession. Everyone's sort of putting their 2 cents in at this point. But obviously, this is not an enviable position that Powell wants to be in, trying to time it just right. And as we know, when it comes to timing the markets, it's impossible. A lot of people waiting for that bottom, waiting until we see that pivot. You really can't time that, which is the risk that's involved here, and perhaps why we're seeing a little bit of a pullback, a little bit of nervousness ahead of the announcement from Powell this afternoon.
Yeah, no question. And looking at bond yields right now, where we are seeing it right now, the 10-year yield still below that 4% level. Certainly, we have seen them come off right now, but it is at 3.78%. The 5-year yield on the shorter end at roughly 4%, and the 30-year yield at 3.8%.
Well, as we've been discussing, it is that time again. Markets, of course, watching every word uttered by Fed Chair Jay Powell as he speaks on the economy at the Brookings Institution at 1:30 p.m. this afternoon. And of course, momentum had been heading toward a so-called pivot on policy. The recent hawkish Fed speakers complicated the picture. Bank of America remains a believer in the pivot, as does Morgan Stanley, though the latter isn't convinced it necessarily means great things for stocks amid other headwinds.